All right. Yes, I believe that you are well today, and welcome so much to today's episode. Now, today I want to take you through one type of investment vehicle, and that is what we call. I want to take you through what we call real estate investment trust. Real estate investment trust. So this is type of investment vehicle that give investors, retail or small scale or small investors, can I say, yes, low net worth or small investors exposure to real estate investments. As you understand that when it comes to real estate, developing a property, let's say for example, if you want to develop a rental property or even a commercial property, where maybe a property where a mall can open up, maybe offices can be housed, it cost a lot of money, such that it costs a lot of money, and also depending with the location where the property is being developed. For example, if you want to come up with a rental property, maybe somewhere there in Westlands, in Nairobi, I'm telling you, huge sums of money will go down. So if then you want to develop a rental property, or if that would be the only way, if that would be the only way you can be a property or venture into a real estate, then it would be very difficult for low net worth individuals to have a taste of real estate investments. So there is a solution. There is a solution called IREIT. Not IREIT, but there is a solution called REITs. REITs is Real Estate Investment Trust. So like I mentioned, in my previous videos, I showed you about some of the collective investment schemes, investments. So IREIT is also, I'm moving too fast. IREIT is just type of the REITs, but let me not get into that first. So I want to still explain what we call, what I mean by a real estate investment trust and how it works. So real estate investment trust, it's just working like the CIS investments that I told you before. For example, I told you that CIS or collective investment schemes, they pool fund from a multiple of investors. Okay, then the pool fund is being used to invest in or to create a portfolio of securities or investments. Then the returns that have been realized from the pool fund that was invested is being distributed to investors in a pro rata basis, or in the proportion of your contribution to the fund or to the collective investment scheme. Yes. So if you contributed, maybe for example 100,000, and the total fund invested in that collective investment scheme, let's say for example, is maybe something like maybe 1 billion. So your unit, your holding will be 100,000 over what? 100,000 over the proportion of what you are holding there will be 100,000 over the 1 billion. So that's what they will multiply with the net return that they have realized to be your portion. So the advantage of REITs or real estate investment trust is that it gives exposure to even that individual or a low net worth individual that would otherwise not have a taste of real estate investment. So they pool fund. After pooling the funds that have been pooled are being invested in real estate. So like I said that CIS, when you come to CIS, there are various products. There are various products. So what determines the name of CIS is, or what determines the investment vehicle under CIS is the underlying asset. You understand? It's the underlying asset. For example, if CIS or collective investment scheme is investing in stocks, then that CIS, the name of that CIS would be equity fund. You understand? So I want you to know how these things work. So the underlying asset determines the name of the investment vehicle. So for REITs, I'm too much into REITs anyway, pardon me. Now for REITs, I'll get to REITs, but for REITs, real estate investment trust, the underlying asset is what? Real estate. You understand? So that is the underlying asset. So after you pool fund, the fund manager or the company that is dealing with which is charged with the responsibility of creating the portfolio or doing the investment or running the business will do the investment on behalf of the investors. So once you pool fund there, what you are being considered as a shareholder or a unit holder in that CIS. So that's how it works. Now under REITs, there are two types. There are two types of REITs. There are two types of real estate investment trust. Now one type is called REITs. Let me maybe REITs. IREITS. REITs. So REITs, I stand for income. I stand for income. Then R stand for real estate. Real. Then E stand for estate. I stand for investment. Then T stand for trust. Then S stand for the plural form. Not plural form, but the scheme. Okay, so it is a real. So if I say REITs, what I mean income generating real estate investment trust. Okay, so trust can also mean scheme, so it's the same thing. So if I say trust or I say scheme, is the same thing. Okay, now so REITs, let me break down how REITs work. So REIT, like I said, it's a trust or it's a scheme. So after they have pooled fund in a common pot or in a common account, they use these funds to develop rental properties. So REITs develop rental properties. So after they have pulled this fund, they develop rental properties, then they let out. Then the income that they shall have received from tenants, which shall have tenants that shall have come to the apartments, what is going to be paid to pay it back to what? To the unit holders or the shareholders who bought the units, or the investors who pull the funds that are used to develop the apartments. Yes, so that is called REITs. Then another thing that is worth mentioning is that you are not locked into REITs. If you wish to leave the REITs, or if you wish to leave the scheme, or if you wish to leave the trust, you can always sell your shares to someone else who is a potential investor who wishes to come in. So that is REITs. So REITs is REITs is pool fund. Then the funds that have been pooled is they used to invest, or they used to develop rental properties. Okay, then the rental income they have realized is what will be distributed to what? Distributed to investors in the pro rata basis. Then another type of REITs is what we call D-REITs. So D-REITs means D stand for development. So it is Development Real Estate Investment Trust. So let me explain this. So how does D-REITs operate? So D-REITs, just like I-REITs, they pool fund. Then after pooling funds, then they buy a land, develop a property on it. After developing a property on it, then they add their margin. Okay, they add their margin to the cost of purchasing the land, a parcel of land, and developing the property. Then they add profit margin. Then they dispose. They sell the property. So they develop, then they sell. So the proceeds, the difference between the cost and, okay, in short, we call it margin. The profit margin that they have realized is what is being distributed to what? To investors as a return. Again, in a pro rata basis. So the difference between I-REITs and D-REITs is that I-REITs is developing properties for what? For rental income, whereby rental income, it can take different forms. Maybe they can develop a property where offices are being let in. Maybe offices are let in. Maybe commercial buildings, whereby trade is taking place, or commercial is taking place, or maybe rental where people are staying as tenants. Then for D-REITs, their work is just to develop the properties, then they dispose. Then the difference between the cost and the selling price is what they consider as is what is their return. Yes, that is being shared to investors in a pro rata basis. Now, after understanding I-REITs, D-REITs, and REITs in general, somebody would ask me, are those things just theoretical, or they are things that exist even in Kenya? Okay, so yes, these are personally, I'm not talking about theory. I'm in the investment world, and I'm dealing with investments. So any questions about this investment I'm talking about, if you wish to start a journey of investment, you can always feel free to reach out to me. I will guide you appropriately according to what you have that you want to, or even financial planning, or anything to deal with the investment, you can call me. So for I-REITs, example of companies that are already offering I-REITs or dealing in I-REITs, one of them is called One of them is this company here. It's called Akon REIT. Okay, it's called Akon REIT. So if you've seen if you're in Nairobi, probably you've seen a hostel written Kwetu hostel. Okay, if you have seen an hostel written Kwetu hostel, it's a prestige hostel. It is a prestige hostel. Actually, the students, those people who are residing in those hostels, they are people who are coming from people are coming from a well-off, a well-off background. So those hostels have been developed by Akon REITs. So all investors that bought or pool fund to Akon REITs, all investors that pool fund to Akon REITs, Akon REITs are the one now enjoying the rent that the students in Kwetu hostels are doing are paying. Then Akon is having both. There is Akon REITs and also there is Akon REITs. So for the Akon REITs, it works as I've explained. They develop property, then after developing property, they dispose. After disposing, the profit margin they share to investors in a pro rata basis. Then for Akon REIT, like I've given you example of Akon REIT. I've told you of what Kwetu hostels, okay, and is it called Kejani, something like that, So those are some examples of REIT. Another REIT is called, it's called, I think you've heard of also this one. It's called Ilam Fahari REIT. Ilam Fahari REIT. Ilam Fahari REIT is another type of REIT in Kenya. And this one was launched by ICA Lion Asset Management. Okay? And it was the first publicly listed REIT on the Nairobi Securities Exchange. So if you want to buy, for example, if you want to be one of the shareholders in Ilam Fahari REIT, this is what you should do. One, you should have what we call CDSC account. Okay? Because you can't trade on stock exchange without CDSC account. So you will have CDSC. You must have CDSC number, which will be issued by the CDSC Kenya. Then after that, maybe also you must have you will choose a broker that you will be using to operate. Then from there you can just, through the app that the broker will give you or through the CDSC, you can purchase. But for more detail on how you can maybe trade on, for example, if you now buy the Ilam Fahari REIT shares that already you are in stock market. So if you want to get more detail about how stock market work, on how you can start investing in stock market, all that, please you can just reach out to me. I will help you. And also there is a link I shared there. You can join that group. Then it will be very easier for you even to catch up on some important updates or financial planning and investment advisory that I give in that group. So that's what I wanted to share with you today. And thank you. Please share, like, comment, and if it's YouTube, please subscribe. And I think we are going somewhere. So the little knowledge that you've earned, please also break it down to somebody else, and let's grow together. Thank you, and have a nice time.